There's one account in the tax code that offers 3 different tax advantages, and once you understand how it actually works, it can meaningfully change how you think about it in a financial planning context. I'm Clayton Boone, and welcome back to the channel. Today, we're going to be talking about health savings accounts, or HSAs, and why, for the right people, they may be one of the most underappreciated tools in financial planning. A health savings account is available to individuals who are enrolled in a qualified high-deductible health plan. Most people think of an HSA as just a simple checking account for medical expenses. You swipe the card, you pay the bill, and you move on. But when you zoom out, HSAs can be much more interesting than that. They often are described as having 3 separate tax advantages, and that combination is what makes them pretty unique. First, contributions may be tax deductible. And if you make them through payroll, they're generally done on a pre-tax basis. But if you make them directly, you still may be able to deduct them when you file your tax return. Second, growth inside the account can be tax deferred. And many, but not all HSA providers, will allow you to invest the balance once it reaches a certain level. And as long as the money stays in the account, that growth generally isn't taxed year after year. And third, and this is the part many people overlook, withdrawals used for qualified medical expenses are also generally tax-free. So when you combine those 3 features of tax deductibility, tax-deferred growth, and the potential for tax-free withdrawals, HSAs create a level of flexibility that's hard to find elsewhere. And that flexibility can be especially valuable for high-income earners because as income rises, access to other tax-advantaged accounts often shrinks. And because HSAs don't have income-based contribution phase-outs like a Roth IRA or traditional IRA, they can be an additional savings tool for high earners. So for people who qualify, an HSA can become an additional tax-efficient or tax-deferred bucket alongside other traditional retirement accounts. So you can see this opens up many more planning options around healthcare costs, retirement income, and even taxes later in life. Now, let's look at an example that makes this a little bit more concrete. Let's say you're working and you're enrolled in a qualified high-deductible health plan, and you're contributing to an HSA. Over the years, you pay for certain medical expenses such as doctor's visits, prescriptions, or other qualified healthcare costs. And instead of using your HSA, you opt to pay out of pocket and you save the receipts. Now fast forward to retirement and you're wanting to take a distribution out of the HSA to fund a retirement expense. Can you do that? And can you do it without penalty? Most likely. And the reason is because you're allowed to take a withdrawal equal to the total amount of those saved receipts, and because it's considered a reimbursement for a qualified medical expense, that withdrawal is generally not subject to taxes or penalties. Now, the key point is that the withdrawal isn't tax-free because it's for retirement spending. It's tax-free because it's tied back to a qualified medical expense that was never reimbursed, and you had proper documentation. So that's why record keeping matters. Saving receipts digitally and keeping them organized is what makes this kind of planning possible. Of course, HSAs also come with eligibility rules, annual contribution limits, and penalties for non-qualified withdrawals. And remember, tax rules are complex, and how an HSA applies depends on your specific situation. And like any powerful tool, it works best when it's integrated into a broader financial plan, not just used in isolation. So if you are enrolled in a high deductible health plan and you want to review how your HSA could fit alongside your savings and retirement accounts, schedule a meeting with us. We'll walk you through it and we'll talk about your options. And if you found this helpful, like the video and subscribe to our channel. We post short, practical videos like this to help you make more confident financial decisions.